The market is hitting new all-time highs, and I just sold $150,000 worth of 2 stocks. I'm gonna go over why exactly I did that, and then I'm gonna go over one specific opportunity that may be around the corner, but let's go ahead and jump into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes. Only results may vary. As you can see, the account just hit brand new all-time highs today, and if you wanna follow me along my 8-figure journey, please be sure to be subscribed by clicking the subscribe button down below. And if you get any value out of this video, I would highly appreciate you hitting the thumbs up button. I appreciate you being here. So let's go ahead and jump into the realized gain loss for the day. As you can see today, we took some nice profits off the table. A $5,000 day, not bad. Obviously, results vary month to month and day to day. And I'm not the only one doing it. As you can see here in my private mastermind, Options Trading University, I had a lot of clients that participated with me on these leaps call options. As you can see, Mike showing his inspiration right there. A new client right here posting their first win, a great win there, right? And clients posting their inspiration every single day. Obviously, results vary based off account size and risk tolerance. But if you do want access to my trades and my leaps, entries, and exits, that'll be at the top of the description down below. So be sure to check that out. Also, I'm giving away some free trade ideas on my Instagram and my free newsletter, which are both down below in the description. So be sure to be subscribed to both of those. It's totally free. Now let's go ahead and jump into the markets, okay? Next week, we have one big thing happening, which is going to be the FOMC interest rate decision, okay? That's on Wednesday, so there might be some volatility ahead of us and a potential surprise, which I want to be prepared for, and that's why I'm shoring up cash. And I'll talk about how much cash I'm shoring up, but as you can see on the CME FedWatch tool, which determines interest rate cuts and the probabilities of them happening, we're 94% chance of us getting a quarter basis point rate cut on Wednesday. So that's most likely. It's gonna happen. Now, there still is a 5% chance of an outlier 50 basis point rate cut. Now, if that happens, I anticipate the market initially selling off, okay? I anticipate, the market's taking that as the Fed is way too late with cutting rates. That's why they have to go more aggressive sooner. And that will lead probably to a sell-off, which I wanna be prepared for. So, there's a 5% chance of that happening, and I've seen these things happen, like outlier events, black swan events, and I just want to be prepared for that because worst case scenario, okay, the market just heads a little bit higher, and I could get back into some positions. But let's talk about QQQ. As you can see, QQQ, which tracks the NASDAQ 100, into the close right now, we're hitting 587, new all-time highs. All right, we could easily hit 590 by the close and potentially even next week into the Fed decision on Tuesday, or on Wednesday rather, we could probably be in the mid 590s. But what that tells me right here is that the market is getting extremely greedy. Okay, we are almost overbought on the RSI. MACD is just looking like it's getting warmed up here. But if we look at VIX, okay, the VIX, the Fear and Volatility Index of the S&P 500, is at 1459, okay? So we're getting into the low 14s here, which tells me that I need to be following my VIX cash allocation levels. This helps me be prepared for any crashes or any black swan events to be able to have that cash to participate and buy the dip, okay? So if we go to my VIX cash allocation levels, you can see we are now in VIX 12 to 15. So essentially I could have 40% cash on the sideline to 80%. I'm not gonna have 80%, that's way too conservative for me. But essentially these are the numbers. And right now I have about 25% cash. So I had 15 yesterday, and now I have 25% going into the weekend just to be safe, because any little piece of news, whether it's a surprise 50 basis point rate cut or something happening with these tariffs or any little piece of news over the weekend, could send this VIX spiking up, okay? We see that happen in the past. Of course, we have periods of low VIX, like back here from May all the way until July of 2024, we had VIX under 15 for almost 3 months straight, right? And rarely did it go above 15. But then we had a huge market sell-off, a 15% sell-off in QQQ, and the VIX spiked all the way up to 64, kind of like we saw during the tariffs crash. So we're kind of getting in this low range where, hey, it's best to have some cash on the sidelines and be prepared for any dips, because those are the best opportunities. That's actually when I actually make the most money, is when the VIX is higher and I'm selling options when they're more expensive, okay? So that is what I'm looking out for, and I'm just being aware of where we are at in the markets. Of course, I think we could head all the way up as high as 600 on QQQ, okay? At that point, we would be definitely way overbought on the RSI. We'd probably be somewhere over here, okay? And, that would call for probably a even bigger pullback, all right? So the further we go up without corrections or little pullbacks, the bigger the pullback or correction will be, okay? So it looks like we're kind of headed to that area. So again, I'm bullish, and I still have a good 75% of my cash allocated towards positions, but I do have some cash on the sidelines ready to go, okay? Always gonna be bullish on the markets when interest rates are being lowered, but I do wanna have cash prepared for pullbacks. Now, let's go ahead and dive into the first stock, okay? The first stock is Palantir. Now, Palantir made a nice run up today. It's currently trading at 171. I had some Leaps call options at 161 that I purchased, and we got out of those today. I was up 6.5% in 24 days. That's more than enough for me. And I don't like to be in Leaps call options when the VIX is heading down close to the 13s, okay? Because you don't want to be stuck in something that's not generating income. I rather be in cash secured puts. So today I closed out a lot of cash secured puts on Palantir and all of my Leaps call options. All right, so let's go to my portfolio and I'll show you exactly what I did. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, if you take a look at the portfolio, okay, Palantir, $62,000 position. This was a $160,000 position this morning, okay? So I took off about $100K worth of Leaps call options and cash secured puts. Now, why did I do that? Well, because Palantir had a nice run up again, and potentially next week it might, have a nice little dip, and I don't want to be missing out on those profits, right, that I could have secured. So that's what I did today. I secured those profits. Obviously, long term, I think Palantir is heading upwards, but if the market pulls back, Palantir is going with it, and so is every other stock. That's just how this game works, and I understand this game very well, as I've been doing it for about 14 years now, okay? So that's what I did. If we go back to the portfolio, I do plan on adding a few more cash secured puts on Monday. I actually added 2 today. So I had 6 that I took off, added 2 right at the close, the 160. So here's exactly what I did. I went out to next month. I'm already going out to October 17, 35 days out. And I sold these 160 puts. Now, currently the potential ROI is 3.4%. I'm happy with that return. So that's why I sold these 160 puts, okay, at 30 delta. Now, the risk is if the stock goes down below 160 in 35 days, by that expiration date, I'm going to be forced to buy 100 shares per contract. So I feel safe at that level, considering that the puts I had previously that I closed out today were at the 167.5 range, and I was comfortable getting us signed up there. So I actually am getting a better strike price and a better discount on Palantir at this level. So those are the ones I'm going to load up on Monday. I already have 2 of them, and I'll probably load up probably 4 to 5 more on Monday as I have ample amounts of cash, okay? So as you can see, my cash levels are very high right now. And yeah, that's going to be Palantir. Long-term bullish. I think this pullback was necessary, and it looks like it's gaining some momentum on actually low volume here, okay? Low volume momentum. This could go higher. Monday, we could open up higher on Palantir, but I didn't want to take the risk here with the overall market being where it is, okay? So cash secured puts are going to be the only thing that I'm doing right here. With the VIX so low, I'm not going to be jumping into Leaps even if Palantir does pull back again, okay? So let's go ahead and jump into the second stock, which is HIMS. HIMS had an amazing run today, up 7.5%. Now, why is this? Well, there's a few reasons, and I told you there was a bunch of haters in the comments saying, hey, good job talking about Palantir when this thing was at 60, now it's at 40. But long term, this thing's probably going to 100, all right? That's where I think it's going in the long term. So I'm not worried about it at these levels. I'm just playing the stock and having fun with it. So HIMS, great company. Obviously, a few things, okay? So let's go over it. Now, the first thing was the court case that Eli Lilly had against another telehealth company with the GLP-1s and the personalized dosages of semaglutide and GLP-1s. That was thrown out by the judge. Basically, the judge said, hey, the FDA says it's, these companies are allowed to do personalized dosages. It's totally legal. So I don't know why, these big companies think they could just sue these small companies, and threw it out the window, and boom, that was an initial win for HIMS, okay? Now, why is HIMS continuing to grow? Well, because they're delivering on what they say in their earnings presentation. So they just released the basically the TRT, testosterone hormone health for men. Okay, this is brand new. They just released this. So this was kind of a new rollout in their pipeline where they can generate extra revenue, okay, extra profits. And if you go to their earnings presentation, this past Q2 earnings presentation, that was exactly what was on their list, right? It said coming soon, testosterone and menopause. And their projected revenue in the billions is 2.3 to 2.4 billion in 2025. Well, they're rolling out and they're already hitting those marks. So that is what we want to see. We want to see companies deliver on what they promise. And HIMS has done that over and over and over again. In fact, if you go to their unit economics, okay, basically how much it is to acquire a customer and then for them to get paid back and start earning profit on that customer, it's less than a 1-year payback, okay? Earlier in 2019, when they first rolled out, right, they were spending $12 per customer and they weren't even seeing those profits until, year 2. Now they're seeing it within 3 quarters. They spend about $113 to acquire a customer, okay? That customer is on recurring revenue, recurring subscription plan, and they stay on it. And within 3 quarters, they're already up $131, which is a profit from their 113, okay, to acquire that customer. And then a Q4, they're already up 156. So they're generating more revenue per customer in a shorter amount of time. That is exactly what you want to see with a company that spends on advertising. You want to see them acquire the customer at a low rate, have a very sticky product to where that customer stays for many years, and that's what HIMS is doing. And boom, they're making recurring revenue. This is it's kind of like, a software business plus, plus health, plus telehealth and all of that. So this is a great company, and unit economics looks strong on this company. So long-term, I'm very, very bullish on HIMS, and that's why I'm continuing to play it. But, okay, let's talk about it. I'm going to talk about my position, okay? So today, as you see, I have 800 shares worth 44,500 that are going to get called away, okay? Because I sold 8 covered calls at $51, which is $1 above my cost basis of 50, okay? As you see, my cost basis right here, 50. So I made 2% in appreciation, and I made about 1% in covered call premiums. So that's about a 3% gain in 15 days, okay? Obviously, results vary every time I do this, but that's what I did. And I'm happy to get these shares called away, okay? I don't want to roll this covered call up at a loss and try to do this whole, let's try to call the top game, right? I'm just going to let the calls get, called away, or let these shares get called away, all right? I even have 1,000 shares of HIMS here that might get called away next week, right? And that's totally fine. So what I did, okay, so that's going to free up about 90 grand between this week and next week on HIMS, okay? So technically I'm selling those shares. Now, what do I plan to do going forward with my HIMS position, okay? Well, what I did today was I added 10 October 17th 45 puts. I'm already up 27% in premium on those, okay? To collect $1,800. Now, if we go to the options chain, this is probably what I'm gonna do next week in anticipation of keeping this position, a six-figure position, because it was 118K. But now that I'm getting shares called away, it's going to be less. So I'm probably going to go out to the same expiration, okay? And I'll go slightly higher. I'll go to maybe to the 46 or 47 strike to collect about 3.5 to a potential 3.9% ROI, depending on where the stock is, okay? So I'm just going to be patient, let HIMS do its thing. This stock fluctuates a lot. So if it comes down, it comes back down here to 52 or even 51, then I'll be able to sell a lower strike price, like maybe 44 or 45. And I feel comfortable getting it down here, okay? Now that it's breached this upper Bollinger Band, it's heading towards that overbought area. This stock fluctuates a lot, right? But long-term, I think it's going way up here. So, just playing it as it is. And I'm going to size up keep this position pretty sized up, but make sure to have 25-ish, 20 to 25-ish% cash on the sidelines, especially with VIX where it's at right now, okay? So HIMS is a massive opportunity for me right here. I'm really loving this stock, and I'm loving these fluctuations because it scares the weak hands and it provides a lot of opportunity for cash secured puts, which are paying out great premiums, okay? So that's gonna be the second stock that I sold out of today, but I do plan on sizing it back up, okay? Now let's get into the last kind of opportunity here, which is Robinhood, all right? Robinhood is seeing a little pullback here from all-time highs, okay? This thing has had quite a run up, okay? I talked about it in the previous video. We went down 7.6% today. I'd like to see this thing get down, potentially all the way down to 110, okay? Let's just call it 110, 111. That would be a 10% drop from all-time highs. If we get that, okay, if we get this 110, 111 area and VIX is back above 15, maybe the market kind of sells off a little bit, we have a nice little healthy pullback, okay, I will be grabbing some Leaps call options again because I've been doing this on this stock ever since it was down, in the tariff lows. All right. So if we go to the portfolio, I'll show you my hood position, 162K worth of cash secured puts. I have the 108s, 109s, 110s. I'm comfortable getting assigned at any one of those strikes. I like the stock at that price. That's why I said if it goes down there, I'm also going to basically double down and grab a Leaps call option. So I'll probably go out to Jan 15. Okay. And let's just say this thing goes down to 110, okay? The 70 delta will most likely be the 100 strike. So I'll probably pick up those 100s, pay, $3,500 to $4,000 to control 100 shares rather than paying 11,000, right? And, I'll ride it back up, okay? Because this stock has been very predictable. The fluctuations have been great and has provided for good trading. All right, and it kind of tends to do this, okay? So we're just gonna do that, and then long term, I think this thing will be, by end of year, probably somewhere around the 130 to 140 area. So I would love to get into those leaps. That's gonna be my free opportunity for this video. But if you did enjoy this, please give it a thumbs up, and I'll see you in the next update. Take care.